Today, I want to talk about how Charles Payne has said that both AMC and GameStop will squeeze. I want to explain Charles's thought process around the short squeeze and exactly what kind of catalyst it will take to cause it. So stay tuned and let's make some money. Now I'll dive straight in with the key information. So, as Charles Payne has tweeted, he said he's heading to the studio because it's short squeeze season. He said he's got a special guest looking at a special name, and the apes together strong should tune in for sure. He then followed up by asking if GameStop is ready to pop and that GameStop is a major short squeeze candidate. So let's talk about how we know that it's currently short squeeze season and exactly what kind of catalysts it will take to cause the GameStop and AMC squeeze. Well, we can tell that we're currently in short squeeze season because a number of the more volatile small cap stocks have been running over the last few weeks. You can see from the screen, Carvana is up from $6.50 up past $17. Affirm up from $8.60 to nearly $20. Upstart from just $12 to over $32 per share. Now, when these shorts are close to being margin called and run out of available margin, they start closing out some of their smaller short positions to preserve their AMC and GameStop squeezes. They'd much rather have stocks like Carvana, Upstart and Affirm run up and double, triple or even quadruple as long as their AMC and GameStop positions don't get squeezed. This is usually how you can tell that we're entering short squeeze season because we start seeing a mania in many of these smaller, heavily shorted names. And it's because these shorts are desperate not to close out of their shorts in AMC and GameStop, but they're more than happy to close out of any other heavily shorted stock to preserve those main core shorts. And we're also still seeing the mania in Nvidia and other large tech stocks that have also still doubled or even tripled over the last 6 months. Now, the reason why these shorts are trying desperately not to allow GameStop and AMC to squeeze, but they're plenty happy to allow these smaller stocks to run up, is because GameStop has tons and tons of key catalysts. Peter Han tweeted about GameStop's pre-market action, where GameStop was up nearly 9% this morning. GameStop is releasing their earnings today after the market close, and they're expected to have another great back-to-back earnings result. This is obviously really worrying for those shorts, A, because GameStop shouldn't be having excellent back-to-back earnings, and especially not in the first quarter, which is typically a seasonally bad period for GameStop. So if GameStop is still cash generative and profitable, that is bad news for those shorts. So it'll be interesting to see if the street tries to sandbag GameStop's earnings announcement, especially with their release of the new Ryan Cohen documentary. Especially as this is also happening at a time where GameStop is currently having its 6th straight green week. As Hang Loose tweeted, he said GameStop hasn't had 6 straight green weeks since 2019. Plus, we're seeing some technical breakouts on the charts where these shorts are known to have less margin and are known to be closer to margin calls. You can see from the chart Hang Loose tweeted, GameStop is currently breaking out of this downward channel and this downward trend. We know that when GameStop breaks above this channel, that's when the shorts really start biting their nails. And that's because this is the time, or this is the area where those shorts are very close to their margin calls and desperately need to try and push GameStop back below into that channel. As Hang Loose says, he assumes they'll have to turn on the algo suppression super hard to hold back GameStop. And obviously we know that if GameStop continues running and starts the short squeeze, AMC will be dragged up alongside. And that's why the Meme King documentary could be great, or it could be a FUD hit piece to try and push down the GameStop stock. Also guys, with Meme you can currently get 1 guaranteed free share of Tesla or of Google when you deposit the required amount. Now you could always use that free share on top of the other 15 free shares to buy more AMC or GameStop shares if you so chose to. And on top of that, Moomoo is very easy to use, it's very clear and concise, and they've got entirely commission-free trading. All you've got to do is sign up to Moomoo using the link in the description below.
He's a contrarian, independent thinking, independent-minded leader.
30-something entrepreneur who essentially took Amazon on successfully and built out Chewy to the great company that is today.
Somebody without a college degree can become the chairman of a public company of the scale of GameStop.
Came upon newfound fame by being the meme stock king, by being the Pied Piper of Wall Street.
And the biggest winner is Ryan Cohen.
Ryan Cohen saw dollar signs instead of doom.
Where's Ryan Cohen when I need him?
He's accumulated fans and almost like a cult-like following My understanding is the Reddit community generally loves Ryan Cohen, hence the moniker Papa Cohen.
You'll see these guys reacting to these tweets like they're secret codes.
In terms of him being a meme lord, I don't know. If I was Ryan Cohen, I wouldn't want that to be my claim to fame.
Ryan Cohen's stake in Bed Bath & Beyond, he's now cashed out of his entire position. Bed Bath & Beyond shares cratering 40%.
Should you expect the SEC to get involved?
It seems like Ryan Cohen is kind of using people to make money.
Every story needs a hero or a villain. Ryan very much filled that role.
Now we could see from the first half of this video, they were very much praising Ryan Cohen for the excellent work he did with Chewy and with GameStop. But by the end of the video, they were trying to make Ryan Cohen out to be the bad guy, basically blaming Ryan Cohen for Bed Bath & Beyond's downfall and asking if the SEC needs to get involved against GameStop and AMC. I personally think, considering this Meme King documentary is coming directly from CNBC, it's likely to be more of a FUD hit piece. And it likely will be used to try and force GameStop back into this downwards channel and stop the GameStop breakout. And what is also interesting is that right now, investors have also taken the biggest short position on the S&P 500 since 2007. Short interest on the S&P 500 has hit an overall negative 17.4%, with many speculating on a crash. So it seems like many retail investors know that this market crash is coming and is likely going to be triggered by the GameStop and AMC squeezes. And obviously this is a very odd contrast, considering the majority of hedge funds and large banks are very long on the market in this extreme greed territory. Typically when this fear and greed indicator hits towards the end of extreme greed, that usually is when a market reversal or market crash is coming. It's when hedge funds and institutions are the least expecting and therefore most vulnerable to a reversal and to a crash. It's when they're maxed out on their long positions, maxed out on their leverage, and if anything goes even slightly wrong, the whole deck of cards comes falling down. And as Joshua Sky tweeted, he said that's why they're on their knees begging you to sell. But nobody is likely selling at $5 per share, $15, $20, $50, $70, or even $100 per share. Joshua believes that $500 per share is FOMO buying only, $1,000 per share is when small hedge funds start being liquidated, and $5,000 to $10,000 per share is when the mother of all short squeezes starts and when these largest hedge funds are going bankrupt. Now, I personally think that for us to break convincingly out of this downward channel in both GameStop and AMC, you either need small hedge funds being liquidated, or you need some great earnings results from both GameStop and AMC to break them out of that downward channel. I do agree that retail investors are likely not going to be selling their shares at any of these small prices, but I do think we need at least some smaller hedge funds being liquidated to kickstart the short squeeze. And as I've said before in previous videos, if both small and large hedge funds end up being liquidated, and there is indeed billions of synthetic shares, AMC could easily see upwards of $1,000 per share. If upwards of 4 billion synthetic shares are bought back and covered during these hedge fund liquidations, that would push the price of AMC to unimaginable new highs. But as I've said, I do believe we will only see these prices if upwards of 4 billion shares are purchased back during both small and large hedge fund liquidations. And to show just how scared the shorts are right now, as Chart Exchange has tweeted, in an effort to reduce market transparency, CBOE has moved the daily short volume data behind a $9,000 yearly subscription. CBOE have said that short sale transaction and volume files will no longer be available on this page starting June 30th. Again, this just really goes against short selling transparency and total market transparency if all data is now being hidden behind expensive subscription services. And finally, a very interesting tweet from Tony Denaro. He said that in other news from YouTube land, most of the AMC stealing 90% of your shares clickbaiters have no problem pumping failing companies like MULN. Even though MULN has just performed a 1 for 25 reverse split that would have also supposedly stolen 96% of their shares. Again, it's just these shills trying to spread more FUD and trying to convince you to sell your AMC shares. Again, I don't necessarily think that MULN or MMTLP or any of the other heavily shorted names out there are bad companies. I just want you to be careful and do your own research, because it seems highly coincidental that these shills want you to sell your AMC shares because of the reverse split, but are saying that you should buy shares in MULN because of their amazing reverse split. As Tony tweeted, he said it sounds like they're pumping MULN, a failing no revenue company. But guys, be sure to let me know what you think down in the comments below. And as always guys, be sure to ding that notification bell, because that way you'll be alerted when I upload a new video. Cheers.